Do you ever feel like the market is playing against you? Like every time you buy, the floor disappears. It's not bad luck. It's a carefully designed trap. And today, I'll show you who's holding the remote. Have you ever wondered how gold, a metal that people have been collecting for thousands of years, can lose $10 trillion in value in just one day? Just think about that number. 10 trillion. It's more than all the gold in America, China, and Europe combined. Physically, that much gold simply does not exist in nature to be sold in a single day. No country opened its vaults. No bank moved trucks full of gold bars. So, what exactly crashed on my phone screen and yours? We've been trained to believe that the chart on the screen is the truth. That if the line goes down, it means someone actually sold the goods. But I'm going to tell you something terrifying. We live in a world where prices are controlled not by people, but by mountains of empty papers, wrappers that don't actually exist. You aren't trading. You are playing a game where the rules change as you go, and your money is taken in exchange for numbers drawn by a computer. Let's look at the fact. During the last crash, crypto lost hundreds of billions of dollars. Bitcoin and Ethereum seemed to just evaporate. For the price to drop that much, someone had to put tens of billions of dollars worth of real coins up for sale. Real money. But there's one problem. The blockchain is an open book where every step is visible. And what do we see there? Most Ethereum owners are just holding it locked up. Big companies and billionaires didn't sell a single coin. Even the old wallets, holding Bitcoin since the last decade, didn't even flinch. So the question is, how did the price drop by a third? If no one who actually has the coins sold them, who crashed the market if the goods stayed on the shelves? The answer is simple. We were forced to play a simulation through futures. That's when you don't buy the coin itself, but just a piece of paper with a promise. To understand this trick, look at gold. There is a concept called paper gold. It's the biggest secret of the ultra-rich. For every single real gold bar in a vault, banks have issued between 100 and 300 paper receipts. Imagine this absurdity. 300 people sincerely believe they own the exact same piece of gold. It's a massive pyramid. When gold falls by trillions in a day, it's not the metal losing value. It's the manipulators flooding the market with fake papers. They are selling what they never had. And now, this exact same scheme, piece by piece, has been moved to cryptocurrency. But wait, it gets even deeper. Recently, they told us that big funds are finally buying Bitcoin through something called an ETF. They said, "Now, the big money is here. We will only go up." But have you ever seen that Bitcoin? An ETF is just another digital safe where you can't see what's inside. You give them your real dollars, and they give you a ticket that says you own a piece of Bitcoin. But you can't withdraw that Bitcoin to your own wallet. You can't use it. You can't even prove it's there. This is the ultimate trap. They have created a giant black hole. All the real money goes into the funds, but the Bitcoin stays where? In the hands of the same people who control the printing presses. While you think you are investing with the big guys, they are using your own money to build the walls of your cage. They have turned the most free asset in the world into a bank product that they can freeze, tax, or devalue at any second, just by pressing a button. Now let's look at how this works technically. When you enter a trade, the exchange sees your cards. It knows exactly at what price you will lose everything. The big exchanges draw the chart themselves. When they see that many people have bet on the price going up, they simply turn on their printing press. They don't need Bitcoins to push the price down. They just draw an infinite number of wrapper sales. Because the real store has very few coins right now, the price plunges from even the smallest push. You lose real money, and the exchange takes your cash for itself, simply because it drew a crash of an asset that doesn't exist. You might ask, if it's so easy, why don't they draw the price up to $1 million? It's simple, because growth is a risk for the exchange itself. If they draw a high price, people with real coins will show up and say, "Oh, great price! Buy my real Bitcoins from me for real money." The exchange would have to pay them out of its own pocket, and they don't want that. That's why they never push the market up as hard, as they slam it down. Falling is safe for them. When the price falls, you can't take anything back. You only lose. You are a hostage of the screen. We try to be smart. We study charts. We listen to experts. We look for logic where it was intentionally destroyed. No asset can fall by 10 trillion in a day without the help of a printing press. It's impossible in an honest world. This isn't a market. It's a giant digital cage. We are in a casino where the owner sees your cards and adds his own numbers to the deck. The only way to break this system is to stop playing by their rules. The system is afraid of only one thing: when you take your coins off their website. Every coin you move to your own personal wallet is a brick kicked out of their pyramid. As long as your Bitcoin is on the exchange, it works against you. When it's in your hands, it becomes a reality they cannot duplicate. Get out of this game while the doors are still open. Your money should belong to you. Don't let them keep you in the dark. If you want to see how the game is really played, join the community.